Investors and traders, welcome to the channel. Market chart pattern today is 21st of December 2024. Hope everyone is having a great weekend. So we are in the holiday season. We are approaching the end of 2024. It is amazing that how quickly this year has gone by, and I wish everyone a splendid holiday season and Merry Christmas for the ones who are celebrating it. So in this video, we'll be taking a look at some of the key currencies. We'll revisit the dollar index quite quickly because I already did that in yesterday's video. And then we'll also be taking a look at gold, silver, and the bond market, of course. And we'll have a look at the weekly charts of the US stock indices and some of the global ones as well. I will not be spending too much time on the stock indices analysis because I've already done that in depth in yesterday's video, so I highly recommend that you watch that. We are actually at some really key support levels which we hit last Friday, so you'll find the analysis really educational. From an educational perspective, you'll find it really interesting, so I highly recommend you watch yesterday's video. So as always, this video is for educational purposes only. It is not a financial advice. You have to do your own work. So let's take a quick look. This is the weekly chart of dollar index. So the dollar index is roughly about 51, used to be about 53.5, 53.2% the euro currency, but it's a little bit less now. I think still about 51 point something. So here we are approaching key resistance level at 108.96, but the euro currency is doing something really interesting. So we will take a look at the EURUSD. So this is the Forex market. This is not the futures. And here we go. What we are looking at is the weekly chart. And here there is a potential for a double bottom right here. So it's been right between the 50% and 61.8% retracement. And you can see that here, this is the market symmetry. I can actually extend it a little bit longer because it went a little bit below that. So here we go. I think that's gonna be, yeah, so I will clone this one and we will actually boom put it right here. So you can see that we have the symmetry, the previous big decline which started middle of July 2023 and ended in October of 2023. It's similar, in magnitude. So it's the concept of market symmetry. I will keep this line, but I'm going to actually change it to a different style, like this, so it's a little bit easier to see. And here I'm going to delete this one. We almost had reached this symmetry onto the upside. So we have to pay really close attention to this, what is happening in the euro currencies. Currencies have really started to move now, because for quite some time you can see that they have been just sideways. In fact, this is where 2022 September 2022, a few weeks before the bottom in the stock market and the bull move started, we saw a bottom come in the euro USD, and now we have another key moment coming up, and there is a potential that what we might be looking at here might actually be a potential double bottom. So we actually go back to take a look at on the shorter term, which is a daily chart for us right here. And okay, so this is a really busy looking chart, and the reason is I've still kept a lot of the old patterns in here. Please tell me in the comments if I should delete them, but I just keep them because if somebody wants to take a look at this chart, they will have this available. And I'm actually also thinking about starting the website. I already have the domain and everything. That way I can actually put these charts in a block format, and you guys can actually have a look. And if somebody wants to subscribe to the email, then I can also send these out on a weekly basis at least. So that way you'll have the exact same chart which I'm looking at, and then if you want to do further work on your own, that will be great, and I can receive some great feedback from you guys as well to improve myself further. So here what we have is something really interesting, because we have got an ABCD, but this one is where the CD leg is extended by 1.272 times of the AB leg. So you see this orange line right here, it hit the pretty much the bottom right here. So we had a initial bottom come in on the 22nd of November 2024, and then this is the Wednesday. Look, boom, smashed right into it. Price the next day rejected lower prices. Price last Friday for the second consecutive day rejected lower prices. Now this is a really big move, and of course we want to see a more consolidation, but look, it's fairly low risk as well. So that's why there is a potential for a double bottom right here. We do have very close to parity if the CD leg extends, but the chances are that the way the price action unfolded with this kind of potential double bottom, we might actually begin to see higher prices, and we'll find out next week. Now, as we approach the holidays, one thing I would like to mention is, especially this happens in the currency markets, and especially in the pair dollar versus the Japanese yen. So sometimes the central banks, especially in particular the Bank of Japan, they become really highly active in the forex market. So they do interventions, some big interventions around the big holidays, for example the New Year's Eve. So if any one of you is actually actively involved in this market, please put a stop in, or maybe even think about your position if you really need to have positions on during this thin trading time period. So I'll leave that to you, but there have been, you can Google about this, where Bank of Japan has come in and done interventions, and they were really so quick. It was really hard to see on the chart as well. And some liquidity providers might not even be able to pick those up, but they did. Those moves did happen in the market. Okay, so I'm gonna write here with a question mark whether it's a potential double bottom. Okay, and with a question mark. So we'll see what will happen around here. So keep on watching this very key level in the Euro USD. Now, if we take a look at the cable, is the cable market, and here when this pattern formed, we had two ABCDs completing right here. This big one, this black one, which was the CD leg was 1.272 of the AB, and then we had this red one where we have the 1-to-1 ABCD, and then we have this little expansion of this swing smaller one right here. So we had a confluence of three things coming together, telling us it's a really strong level for resistance, and if we were just watching this, it was also target for us. Now what is happening, let's see. So I think we have an ABCD here. Okay, so there we go. Boom. I'm gonna make it different color. Let me actually make it red, and I will also make it solid like this. Let me get rid of this one, just copy this. Here we go, and there we go. Right to the bottom right here, misses by a few ticks, but here we go. Now that's one thing. The other thing is we also have this 78.6% retracement of this low 22nd of April 2024 to the highs September the 26th 2024, right nearby. Then let me draw this retracement, which I have not drawn yet, and here we go. Okay, so this one is between the so this one is actually not really the 61.8. I was thinking maybe it's gonna be 61.8% retracement, but it's close by, but not exactly. But we also have this bigger ABCD, so it's nearby but not close enough still. And if we were to take a look at the expansion of this swing, here we go, and let's take a look at 1.272. Boom, there you go. So that's also close by. So this is what I like to call harmonics. Okay, so we have a confluence of 1.272 expansion of this swing. Let me actually draw it like this. Boom. And the levels that I'm selecting, they could be a little bit approximate, because sometimes you could argue, why take this low, why not take this low. Well, this low, or maybe you can take the body, the lower part of it, because this is where the real move really started. Okay, now we have a confluence of 1.272. We have the 786 here nearby, quite close. We have the 61.8% retracement as well, and then this has a potential, the ABCD of course, so this has a potential for a double bottom. The other thing is that this is the symmetry which had existed in this move lower, and this one had actually exceeded this, so that was broken. It went right into our resistance level right here. So I'm actually going to delete that, but you can watch all the videos to see. Now it has the potential to rally all the way to 38.2% retracement, which is around 128.38. Okay, so potential double bottom in British pound as well. So again, all depends upon the weakness which is likely coming in the US dollar market. Now let's actually write this. We have AB equals CD, plus we have the 1.272 expansion, plus we have the 786 retracement, plus 618 nearby. Okay, so these are the ratios and patterns coming close or together. So this is the harmonics operating in this move right here. So it has a potential to be a pretty significant, perhaps a bottom around here. And last Friday we saw a rally, and if it begins to close above the 20-day moving average, and in particular about above the 38.2% retracement of this entire move, then we have a pretty good chance that we might have seen a double bottom around here. One more thing I would like to do is, let's take this and I'm going to draw a retracement. Okay, and let's see. So this move, we missed it. We missed the 61.8% retracement of this move. Here we go. So on the way up now, of course the key resistance is between this 38.2% to 61.8%. That's gonna be the key region that I'm watching for now. Okay, here we go. Yeah, getting above this, British pound has pretty good chance of moving higher, perhaps much higher, taking these highs out, and then we could be looking at a structure of A, B, C, D, really long-term, bigger one. On the weekly charts. Okay, so this is what we are watching in the British pound. Now let's take a look at the Japanese yen. Because this is the daily chart of the Japanese yen. You guys will recall we had drawn this and written double bottom with a question mark. So I'm going to actually change that, because it's been a double bottom. It has been a double bottom, and this pattern caught it. Initially we were thinking that around here we had the 38.2% resistance, which might actually hold this move, but it's just been strong. Now let's see what is happening here. So here we go. So one thing is we are right at the 78.6% retracement, but look, it also shows this move is pretty strong, because it has actually retraced so much of this pretty strong downdraft. But if there's going to be weakness coming in the US dollar, then we could expect the Japanese yen to, of course, strengthen, and it is right at this key level. Now I don't really see the I cannot spot a proper ABCD right here. But what I could also do is just draw an expansion level, because if this being a pretty strong move, if there is a rally coming from this, I would imagine this 159 level, it's gonna be pretty strong resistance. So between 157 and 159, it's two big figures, so it's quite a bit actually. But this is where I would be looking pretty much right here, because it's 78.6% retracement. We could see some strength coming in the Japanese yen. Again, as I mentioned, during the holiday period, the Bank of Japan, they become pretty active in the markets, and they do interventions, and they do it unannounced. So probably best to stay away, in my opinion, from this currency pair. You know, because there are other ones which are showing really good pattern formations, such as the British pound and the euro versus the US dollar. Let's move on to gold market. Okay, so we are going to take a look at the gold market through the COMEX futures, and also I'll show you the spot market, because the patterns are slightly different. So here we have seen a pretty strong move to the downside, and if you guys remember the last video which we did, in which we took a look at the gold market, we have a slightly bearish tone on the gold, and the reason is because it has completed these really big patterns right here. So I'm expecting or anticipating a pullback, which could actually initially happen till, let's say, 2350. Possibly this is like a monthly chart, so of course it's going to take quite a lot of time to develop, and then even possibly as low as about 1900 if the support is given out to the downside. Now moving back to the daily chart, we are moving into a time period from next week, which is, from a seasonality perspective, bullish for the gold market. So I am expecting the gold to remain stable, pretty much around here, but in a trading range. And it could retrace quite a bit of this move lower. So we could see, I mean, in other words, this low that we have seen last Thursday, market could actually just remain this range bound between this low and this high, but with a drift to the upside. And of course, look, I have drawn this little ABCD in orange, and unless this high is taken out, the chances are we are moving in this ABCD pattern with the first kind of level of 2500, with the possibility of even lower, where we could have some other support, such as structural support, come in. But looks like the gold is moving in this ABCD structure. Now if we were to take a look at the spot gold, so you can see it's a little bit different. Why? Because we have this pattern in which the gold and the COMEX gold, it's much higher right there. In fact, it's 1.272 of this swing, this high to this low, but we don't see that in the spot market, right? So the futures market have some sort of, because the interest rate differential, it's a little bit different. Now what we are seeing is, you can see this as double top formation. So we have a range bound market right here, but again, as we were looking at in the COMEX gold, what I am anticipating is a range bound market with a bias to the upside, because of the seasonality which exists in this marketplace, and we could see moves which are going to be perhaps closing this little bit of a gap, 2670, maybe even a move towards 2700 on the spot market. And there is a potential that what it's doing is actually forming a head and shoulder, because there is a pretty good symmetry between the left shoulder and the right shoulder formation. Of course, the neckline will be right here. If it breaks below that, then we're going to see that pattern that we were talking about. Now on the positive side, what we have is basically this ABCD in brown line, which completed, and then we have seen this move higher in gold, but it got stopped right here, which is a double top formation. needs to be still confirmed. As long as this low is not taken out, it still needs to be confirmed. So this is what we are watching in the gold market. So the outlook is because of seasonality, next couple of weeks, especially a few days before the Christmas holidays, the Christmas day 25th, it has a bullish bias going into 26th, 27th, and we could see a move in a gold, which is going to be positive, or in fact basically a retracement of this. So this is what we are watching in the gold market. Let's cover the bond market. So let's take a look at the 2-year treasury notes. This is going to be the shorter end of the curve. Look at this. Now, something really interesting. So if we look at the Fed fund rates, which is what Mr. Powell did, the chairman, he announced 25 basis point cut, and where the 2-year treasury note is, they are actually very, very close now. So they have actually they have actually basically reduced the what do you say, the gap between them. So let me actually try it in a different way to show it to you. And if we do it on a new pane, here we go, and look, the Fed fund rates are about 4.63. Now, one of the things is that Fed fund rates, they move in a range of about 25 basis points, right? So they have an upper boundary and a lower boundary, and by taking these boundaries, you can see that the 2-year treasury note is pretty much, or the Fed fund rates are pretty much in line with the Fed fund rates. So I'm going to delete this. Here we go. Okay, now we had actually called for a move right here with this ABCD pattern. It got completed, then it went a little bit lower, took out the lows of this, and then it has moved back right into this key target that we were watching for. It was a little bit disappointing when it actually broke above the 38.2% retracement, and it just seems to be moving towards this 61.8% retracement. But the chances are, because the 2-year and the gap between the 2-year and the Fed funds is so narrow now, that there is a potential that it could be a ceiling right here, and what we could see is actually a move back in the shorter end of the curve, maybe towards 4% or 4.1%, still range bound, but we could see a move lower. In fact, one of the things which is also possible is a move right here to the 38.2% retracement, which is going to be 4.047. So that is possible. So I think we could see some ease coming up into the rates. That possibility exists. Now, if we take a look at TNX, which is the 10-year treasury, here we had a really strong resistance, and the market actually went right to the 38.2% retracement. But look at this now, it has actually moved higher, but it could also be a move like this. So it could be like a head fake, and then there is just no follow through. So we should give it more time before we get some confirmation whether it's a sustained move higher, so yields moving higher, or whether it is a move like this, where we get like a head fake and then it just begins to move lower, because ultimately this high is lower than this high, which is lower than this high, right? And this low and this low, or this low, is lower than this low. So we'll have to give it a little bit more time, in my opinion. And if we take a look at the 10-year treasury note in the futures market, here we go. Look, last Friday it reversed, but we need more strength. It's a pretty bearish looking chart, so clearly the bears are in control, and the prices have been going lower, or the yields moving higher for a long time, meaning about 4 years now. So it is bearish, no doubt about it. And then look, we had this trend line, it was also broken, so we could see at least a rally in the 10-year treasury note. And then we can take a look at, as the first target, the 38.2% retracement. So it could rally back right into this 109, possibly even 110, trying to take this high out. we'll see, but it's a pretty bearish looking chart. So it looks like the rates on the longer end want to go higher. This is what the charts look to be set up for. Now if we take a look at the long bond futures, this is the ticker symbol ZB, we have something similar. But look, last Friday there was a pretty good attempt to rally, but the market is really bearish. If there is going to be a rally, then 38.2% retracement, maybe it goes up till here, and then it's a pretty strong resistance. It's come into this, which looks like more like a gap around here, so maybe it just stays here a little bit, try to rally. I find maybe good resistance from 38.2% retracement, just the way it did right here. We could see if this low of 113 gives out, then we are looking at the rates going back to about 106, so higher yields on the longer end of the curve. Let's take a look at some of the foreign markets. So let's take a look at DAX. So this is the chart we don't often look at because we focus a lot on the US markets, but time to time we do take a look at the foreign markets, such as the European market. And here we had this pattern drawn. You can watch the old videos. The pattern was completed, and then the market went a little bit higher, but it was a trading range. This candle on Friday the 13th did not look very convincing. There was no follow through the next Monday, and boom, we had a sharp move lower. And look at these gaps, like and this is a cash market, this is not futures. So not a great looking price action, and there is a possibility that it could actually, if we just take a concept of the market symmetry, and it has actually completed that. There we go, boom. So this has been completed, and if we take a retracement from here to here, looks like a 50% to me, and boom, it is 50%. So yeah, if there is a chance, we could next Monday we could just kind of move open right here, and just do not take out this low. We just go in trading range. But it was a pretty bearish looking pattern formation. 3 drives to a top pattern, and we had 2 of these coming in the same ABCD from this orange one, this one, expansion, a number of things. We saw a decline, a pretty good important support right here. Getting below this, it would mean basically this symmetry is being broken. Could open up lower prices if it's held. Maybe it goes trading range, with a bias to the upside. So we'll have to wait and see now. Let's take a look at the UK market. So this is going to be the FTSE. Here we go. FTSE is a beast of its own. It's you can see, look at this price action. It's just range bound market. It did this ABCD right here with an extension, actually with 1.272. CD leg is 1.272 times the AB leg, and it's just been range bound, but it did pull back quite hard right towards the bottom of this range. So next week we might see some further range bound price action. And if the British pound begins to rally versus the US dollar, that could put some strain on this index as well. And the other thing is that the Bank of England came out last Thursday, and they did not cut the interest rates because of the situation with inflation, and that could have something to do with this kind of price action for quite some time. But one of the things about FTSE 100 is this is listed on the London Stock Exchange, but a lot of these stocks are actually foreign stocks, and it has a lot of miners in them, gold miners, other miners. So FTSE is something I don't like to trade. It's just the price action could be really frustrating. Goes into trading range for quite a while. We do have this longer term ABCD, which is quite a bit high. Whether the market gets there remains to be seen, but it's just gone into a really long trading range. Could it be some sort of distribution pattern? Hard to say, but it is maybe going into this kind of pattern that breaks out. conforms to our pattern formation, maybe then rolls over to the downside, we have to wait and see. So this is what we are watching in the foreign markets. The US market, I have actually covered them in yesterday's video. We'll just have a quick look at the longer term weekly charts. Here we go. So we had this big ABCD which had completed. In fact, we had two of them. We had three of them. The black one, the blue one, and this smaller black one. They're all coming right in this region, and then we saw a snapback right here. The market on the weekly is still really, from momentum perspective, supported by 20-week moving average. The price is above that, which is above the 89 period moving average. So yeah, I mean, could it be a start to some sort of a move again? Watch yesterday's video, because we hit a key support level. It's a key harmonic support level. As long as, in my opinion, price remains above that, it's held, we have a chance to even go higher. And then we have and if that support level is broken to the downside, yeah, of course we could have bigger pullback. But here we go. This is NASDAQ 100. Look at this wedge formation. Hit our target, in between our upper target, lower target already achieved, and maybe hits our higher target as well, remains to be seen. And then we take a look at the Dow. This is the most interesting one for me. So Dow had been actually going down for, I don't know, over 9 consecutive days. It's something the media reported. The Dow hasn't done since 1974. So it was very, very interesting. It hit exactly the 20-week moving average, which acts as support. There is also this trend line here, which could be a fulcrum or support. I don't think it'll reach that, because it also hit a harmonic support level. But it's also, look, as ABCD completes a little bit higher, but it went right into this box. This is what we were kind of expecting. On the daily chart, let's actually show you the daily chart, because it looks really ugly on the daily chart. Here we go. Look at this. Boom. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive days of down moves, and this was like what? It was down 1100, more, a little over 1100 points in one single day. Wow. But it also hit some really key support. So this is like harmonic support. 38.2% retracement, plus the 50% retracement, plus the 78.6% retracement, plus the 1.270 expansion. Getting below this, but as long as held, yeah, I think trading range, maybe even higher prices. So this is what we're watching in the key US stock indices. So thank you very much for watching the video, and if you found this video of educational value, give it a thumbs up. If you like our technical analysis, how we look at these markets through the eyes of pattern recognition and Fibonacci retracements, expansions, projections, and extensions, then please do subscribe to the channel. And if you do, then please hit that bell icon button. That way you will know when the new videos are posted, and you will not forget, you will not miss on any new videos being posted. So thank you very much for watching. Good luck, good trading, and speak to you guys soon.